Right now, it's time for our first check on Wall Street, which is on a roll right now. Here are the latest numbers from the New York Stock Exchange, and we can check those out for you live. The Dow just barely up, but look at the big number. That's what we are really counting on, 10,945, looking good. NASDAQ down almost to 20 points, 2379. S&P 500 down a 1158. And with more on the recent upswing on the stock market and other improvements in our economy, we're joined today by David Rhoda.
He's a manager with Rhoda Asset Management in Miami, and he's here to talk stocks. David, thanks for joining us. So what's your take already after the big soaring yesterday? Best in 5 months. The Dow's not doing so well right now.
Well, I mean, we're waiting on some news tomorrow. We had some indications from the ADP job report today that I guess weren't too good. We lost about 39,000 jobs according to that. But I think the backdrop is pretty positive for the near term, at least. You've got the Federal Reserve indicating they're going to step in big. The Japanese are doing quantitative easing, throwing more money into the markets. And generally speaking, there's a lot of liquidity flowing in from governments that puts a backstop on markets.
Okay, well, we like the looks of those numbers, and a lot of people have been very hesitant and holding back on their money. Is this a good time for them to get back into the market now that they're seeing this?
You know, it's a good question. It's hard to get back in when the markets went up 10% in the last month. But if you look back to the beginning of the year, they're only up about 4% or so. So it's been a very volatile time. And you've had a renewed indication by the Fed that they're really going to step up their expansionary efforts. So I would argue, yes, you should be phasing into the markets if you're not in now, and that is if indeed you're the type of person that really should have equity exposure. Not all clients are suited based on their risk toleration, but the answer is yes. I think equities go higher.
All right, I don't know if you saw the numbers. We just updated them on the screen there. Now all three major indexes are down, including the Dow. Bottom line, as Wall Street reacts to all of this and we talk about stock portfolios for other Americans, what does it really mean, though, for mainstream Americans? What does this mean for my pocketbook?
Well, that's one of the interesting things. I mean, the economy is going to be slow. There's no question about it. Unemployment will be high. It's going to be painful for quite some time. But if you look at what the government is doing in terms of fiscal stimulus, in terms of monetary stimulus, that will eventually help the economy somewhat, but what you will see is you will see asset prices inflate. And Americans are heavily underinvested, the retail investor, in stocks right now. And if you really look at it, going back to 2008, we're pretty much back to the peak of 2007 earnings if next year's earnings expectations pan out. But the market would have to raise about 30% to get back to the peaks. So markets look fairly cheap, cash flows are strong, balance sheets are great, there's a lot of cash on the sidelines, so I would say in the near term, downside is limited. You use weakness to buy.
A lot of people did purchase those penny stocks in the last few years, so we appreciate talking to you, David Rhoda. You've been helping us with making some decisions in the future, and we hope these numbers stay up, especially going into the holidays. Once again, David Rhoda from Rhoda Asset Management. Have a good day. Thanks for coming in.
Thank you.